Another expense that is specifically allowed is scientific research expenditure. A person is allowed a deduction for scientific research expenditure incurred during the year of income in the course of carrying on business, the income from which is included in the gross income. The income must be included in the gross income. You should note that. It is key. So a person is allowed a deduction for scientific research expenditure included during the year of income in the case of carrying on business, the income from which is included in the gross income. So scientific research expenditure in relation to any person carrying on business, it means the cost of scientific research. We note that cost of scientific research undertaken for purposes of developing a person's business, including any contribution to a scientific research institution, which is used by the institution in undertaking research for purposes of developing a person's business. So, in case you incur any expenditure in scientific research, when you want to develop your business, it is allowed. It is not taxed. Or you contribute any money to a research institution, it is also allowed. And this excluding expenditure incurred for acquisition of a depreciable asset or intangible asset. So when we talk about research, like research expenditure, we do not include the expenditure that you incur to acquire the depreciable or intangible assets. It does not include the things of acquisition of land, buildings, and expenditure incurred for purposes of ascertaining the existence, location, extent, or quality of a natural deposit. So it is not related to any capital expenditure. Like the things of buying software, anything that is related to capital. It is not regarded as scientific expenditure. But those expenditures that you incur during the scientific research, in case you want to develop your business, they are allowed as a deduction. They are not taxed. Then another one we have is training expenditure. Training expenditure, an employer is allowed a deduction for expenditure incurred during the year of income for training or tertiary education, not exceeding an aggregate of 5 years. So the training should not exceed 5 years, of a citizen or a permanent resident of Uganda, other than an associate of the employer who is employed by the employee in a business, the income from which is included in the gross income. So in case you incur any expenditure in training employees whereby those employees are not related to you, it is allowed as a deduction, but it must not exceed, the training must not exceed 5 years. And the training must be to employees who are citizens of Uganda or permanent residents of Uganda. It should not be anyone who is related to you. In case you employ your wife in your business and you take your wife for training, your wife is an associate, like she's associated with you, and that one will become non-allowable. But the person that goes for training is not supposed to be associated to you. They're supposed to be independent from the employer. So any training expenditure to employees who are citizens or permanent residents of Uganda, when it does not exceed 5 years, is allowed as a deduction or it is subtracted. It is not taxed. And a permanent resident, when we talk of a permanent resident, we mean a resident who has been present in Uganda for a period or periods in total of 5 years or more. So if you've been in the country If you've been in Uganda for 5 years and more, you're considered a permanent resident of Uganda. Yeah. Then the next expense that is specifically allowed is the charitable donations. Yeah. Those donations, these are gifts that are made by the taxpayer to exempt organizations. You should note that. Exempt organizations are those organizations that do not pay tax. The football clubs, NGOs, those ones. Yeah. So these are gifts made by the taxpayer to exempt organizations during the year of income. The value of the gift of such a gift is allowed as a deduction. Is allowed as a deduction for that year of income. And the value of the gift is the lesser. You should note that the value of the gift is the lesser of the value of the property at the time of making the gift, or the consideration paid by the person for the property. So the value that we consider is either the market value of the property at the time when you donated it, or the money that you paid to acquire that property. One of the two, the lesser is what we take. If the market value is maybe 2K, and then you paid like 15K to acquire the property, this is what we allow as a deduction, the lesser. Yeah. So the value of the property, the value of the gift is the lesser of the value of the property at the time of making the gift, or the consideration paid by the person for the property. And the amount of the deduction allowed shall not exceed 5%. 5% of the person's chargeable income, calculated before taking into account the deduction. So when we are dealing with donation, we also do it the same way like accommodation. We calculate it less. Since we shall have to compare it with the 5% of the chargeable income, and the donation is not supposed to exceed 5% of the chargeable income. We only allow the 5% and the rest becomes non-allowable. So the amount of the donation shall not exceed 5% of the person's chargeable income. We shall be seeing, we shall look at it in one of the examples. That we shall look at. So charitable donations are allowable if the gifts are made to exempt organizations during the year of income, and we take the lesser of the value at the time of making the property, or the consideration paid by the